I'm Keegan Shivers.
And I'm Nick Shivers.
And this is the Shivers Report, where you get the most up-to-date real estate information
in the world.
Everybody was really excited for the Fed cut rates at the end of this month. It happened, and mortgage rates went up.
Yep. Oh, Powell.
Powell.
Mixed message Powell is what I call it.
Yep. So why did mortgage rates go up instead of down, even though the Fed cut rates? I know we've talked about this, but for anybody listening that hasn't heard about it.
So remember, the Fed funds rate affects like credit cards and car loans, but it's not the long-term, the 30-year mortgage. The 30-year mortgage is more, they call it the slow dance, but with the 10-year. But it all has something to do with it. Now, remember, in the mortgage market, they already priced in. There's a thing called, what is it? Polymarket. Polymarket,
where you can just bet on all the stuff during the day.
Polymarket had it like what? Was it 98% red? So the market, the mortgage market already had priced that cut in. And then what happened was afterwards, remember, what did he say afterwards? He said, I'm kind of driving a car in the fog. And what he was saying there,
putting a lot of confidence into everybody.
And what he was saying is because, the government shutdown was that he wasn't 100%. We have to be cautious. Okay. And then on top of that, which is really, as soon as he said that, the markets switched. Okay. And it was, don't bank on a December rate cut. And at the time, right before the talk afterwards, I think Polymark had the rate cuts in December at 90%. Now it's at 70. So the reality is the likelihood of another rate cut is still good. The other thing is, he said, we are done with quantitative tightening. And remember, what quantitative tightening has been is they've been letting those securities roll off their books. And I think they went from like 11 trillion on their books to 6. They're saying that is, they're done with quantitative tightening, but that doesn't mean they're buying additional mortgage-backed securities. So he had a lot of mixed messages, and I know Powell's not supposed to be political, but right now, some of those comments that he makes, I think there's just like this, Trump.
Like backhand comments stuff.
Trump's doing the same thing, against Powell. So that's a challenge. And so the markets reacted, and now we were at 6.13 on yesterday, and I think we're at 6.33. The reality is this: that makes mortgage payments it's about a $60 a month difference. Now, again,
for some people, that is a big, it could be a paycheck, $600, $720. Like that saving also is
$60 a month. I mean, in today's market is a big deal. $60 a month, $55 a month.
And I mean, it's funny because if you just follow, what is it, Polymarket or Polymart? It seems like looking at that, it could actually be a resource right now. Just seeing what the narrative is for just people looking at the market as a whole.
I actually, here's the thing. I've said this forever. The data that the Fed is using, okay, another thing that he commented on, he goes, tariffs are causing goods to go higher. But we are now seeing housing.
Cool.
But housing's been cooling since late 2022. So the reality is, Powell, even though he's saying it's foggy out in his rear view, he's actually driving, looking in the rear view mirror with that. We knew that started happening late 2022. Rents have went down or stayed the same in certain areas, and specifically in the South, they went down dramatically. In Arizona, they're given like 3 months free. So yes, housing costs, we knew that was going to happen. And now we're having Amazon with cuts in employment. UPS, was it UPS? UPS with another round of layoffs. So we definitely have some labor issues, and I don't see that getting any better anytime soon. So it's going to be interesting because again, we were getting into where affordability started creeping back into the real estate market.
Yeah.
So it's going to be an interesting late 2025 going into 2026. I still think 2025 will be better than it was last year, just by a sliver. Just because I think at the same time last year we were at 7.03% interest, and we're at 6.33.
I feel like 6.13 is the dreaded number right now because we've hit it twice.
Yep.
And then the next day it's jumped up by
both times.
Same exact way, because we got excited the first time.
Yeah.
Jumped up, played around for a bit, came back down, and did the exact same thing again. So do you think that 6% is a big like milestone when it comes to interest rates, just getting below that number that could pick up market demand quite a bit if it does?
I had a friend just ask me the question, because Fannie came out with their thing, and they believe in 2026 we'll see 9.6% more home sales.
That's a major increase.
I mean, now remember, we always have to ask the question, compared to what?
Yeah.
We've been at the lowest level of home sales since 2022, late 2022, than we have in documented for population growth. So we have been in a complete crash for home sales, not values, but home sales. Okay. If we got below 6%, I believe that 9.6 number could happen. If we don't get below that, it's not going to happen.
It's going to kind of be a rerun of what this year
it's Groundhog Day.
Yeah.
Again,
everybody's waiting for it to come back out. Do you think, because based on some conversations that we've been having and on our team we've been having, is that the end of this year could be really good?
Yes.
Do you think with this kind of back and forth that we're seeing with these interest rates, that could stall the late year momentum that we thought would be going into this last quarter?
Well, we've seen it a little bit. I thought it would be better than it was. I still think it will be better than last year, but not to the extent, because like when we got a 6.13 the first time, and boom, we saw a lot of activity. Now, remember, historically in the Pacific Northwest and in a lot of areas, November, December are the slowest months all year long. Why? Holidays, people, don't want to move historically. So do I think it's going to be better? Yes, I do believe the end of the year will be better than 2024, just because of interest rates. A lot of people, we had some of the slowest summer and spring markets than we had. And so a lot of people that were expected to buy did not buy. And now inventories are creeping up a little bit. They went down from the peak, which is 33% more inventory than this time last year, all the way down to 17. And I think it's back to 18. But I do believe it will be better, just not anything dramatic.
Yeah. What I find interesting too is, stock market is almost at all-time high.
It is the all-time high.
Yeah, all-time high. Housing hasn't seen a major decrease like some people have predicted.
Right.
But because the labor market is cracking in some aspects, it feels like the interest rate cuts for people who own assets, it'll be really good. For people who don't, it'll be a struggle.
It could be. And that's a fine line. And I think America was built on the middle class. And right now we're having a big divide on, if you own assets, you have gotten richer since 2020, significantly. If you don't own assets, it's been a struggle because of inflation. The good news is, I do believe, we're at 3%. If I think the housing costs, they're still over propping that up. I don't think it's as high as they have it. But overall, I think we have to figure a way to get affordability back into the game of home ownership. And the only way you do that is deregulate. Here in the Pacific Northwest, we have a lot, like with the urban growth boundary and stuff like that, that keeps building confined. And then if you keep adding all these crazy taxes, there was a stat in Oregon, Washington, California, up to 24% of the cost of building a home is red tape, all the permits and fees, 24%. And when the average price is about $600,000, that's $120,000. So something's got to give. Something's got to happen. Thanks for tuning in to the Shivers Report.
And if you have any questions about real estate in the Pacific Northwest,
we have you covered.